All right. Welcome, everybody. This is the week 4, the last year of January, or we'll run that back. All right, everybody, welcome. This is the week 4 weekly review for the month of January in the year 2023. We're going to go ahead and dive right in. Looking forward to getting your feedback. Please drop your comments and questions in below, and let's jump right in. So this week, overall markets wise, it was honestly a fairly strong rebound in the market, just kind of based on where things left off the week prior. There's some very strong bearish notes than the previous week. So going in here, there's honestly kind of a correction back to the upside. Some pairs decided to remain in trend. Other pairs also decided to kind of go counter trend as well. So we'll jump right in. For starters, I did take some losses this week. We'll be going into those and then just going into how I saw the market and some mistakes I made as well as a trader. So let's jump into this first one here. This is on Monday morning. This was my first loss of the week. This was a trading error. The main problem with this one, it's overall a great trade. Nice trend, nice direction. We have a good L50, our market sentiment line, our price action, our EMAs, and our higher time frames are giving us mostly bullish directions. The higher time frames I felt could have been a little bit better to show me to the upside. We do have the Asian range broken. We do have clean structure. We do have good things giving us mostly key insights to look for the continuation higher. An error here was I did not enter properly. I got my entry signal. The following candle is when I should be entering. I ended up going in late. Thankfully, the following signal did give an A signal. The issue here was that on the entry candle there, I unfortunately decided to exit prior to the candle closing. Due to that early exit, I ended up missing out on some profits as this trade did end up going in my favor. A few things here due to the late entry, my risk reward to the high of day where it did end up going wasn't as good as it could have been if I had a better entry. And then secondly, just it's not really a proper trade to take. If it's missed, I should respect it as missed and not end up hopping in late or having that kind of fear of missing out. Another thing here on this trade, being that I was in late and really shouldn't have been entering at all, I did end up placing a little bit more risk than I should have, being that if I did enter this properly. So the main thing here is just really the issue of entering when I shouldn't have, placing risk when I shouldn't have been in, and also exiting too early at the same time, being that this trade did end up going in my favor. Due to the fact that I did enter late, I believe that's the reason why I was overly cautious and ended up exiting early, being that I'm already in late. So I might as well not cost myself anything extra if this does end up not going in my favor. And in that case, not waiting for the candle close, and just seeing that the EMAs are still in the upshift, maybe taking half off due to the fact that the next candle is below the 21 EMA. Maybe just taking half off rather than the full thing is what I need to do moving forward. Going on to the next one here. This was also on the 23rd. I did not end up taking this. This is on the 1 hour time frame. This is a pretty nice A2 signal. We did have some news this day, so I do want to kind of say that as we do see that super volatile long candle there. We get an A2A signal. If you do enter, your next candle is a pretty strong bullish candle through some US news. I do want to note that, but it does give you a nice return. Moving on, we have gold. This is another entry I took. This is on the 24th. This is Tuesday. Some key things to note here. I do like the trend bias. We have good EMAs. Our higher time frames are telling us to look for buys. The other parameters of the trade requirements needing to be met are also being met for the A2, like the volume. The Asian range is broken. The signal is coming off of structure, being it's off of the Asian range high. In terms of the 15-minute level, it is a level 2. But again, here we do have some strong divergence from the prior week. And that's kind of what I can't really say that's the determining thing that sends it lower, but this does end up going lower, and does end up tagging me out. On to the next one here. The only takeaway I really have from this is, I felt it was worth entry. I placed with proper risk, just losses are part of the game. Not everything's going to be 100. Next one here, Euro AUD. I did end up sitting out on this one. This is on the 1 hour time frame. Some knocks here. The higher time frames were a little bit messy. The signal in which structure came off of could have been a little bit better as well. I would have rather seen this coming off the Asian range low rather than the Asian range high. And just I don't really like trading through that Asian range back to the downside. So kind of set out for those reasons. You're looking to get your risk reward through the Asian range. So those things kind of made me had it as a C setup and had me end up sitting out. This does end up running 2R in favor. So it's something I'm gonna do a little bit more research on or not being hesitant of taking those trades, even though the Asian range is broken to the upside, still taking it, being that price may need to break lower to the downside. So just a little bit more research on these, but all in all, I'm fine with sitting out on these. There's going to be trades you sit out of that run well. There's going to be trades that you enter and don't stay in the full move and you miss profits. Just a key note here is getting used to that, realizing you are not going to be 100% profitable trader. You need to get used to taking losses and managing them accordingly. So if you take a loss, you don't end up going off tilt afterwards. Thirdly, there's going to be markups where you feel you didn't need to enter or shouldn't be entering, and they do end up running well, like this one here. It's part of the game and part of the process. There's ones where you do take and they end up in a loss, and the ones you do end up not taking end up going profitable. The key takeaway really is how you manage your mental emotions after seeing those things, and kind of not letting yourself go off tilt afterwards. On to the next trade here. This is GBP AUD. I would say this is my worst trade of the week. And I say that because there is A, no signal. There is B, no edge to this trade. There's no signal I'm trading off of. This is just kind of a emotions-based trade where I saw the trend on the higher time frames looking nice. So I came down to the 15 and decided to look and see if I can find somewhere where I could place worthy risk reward and see if I get that continuation to the downside. But I do want to point out some clear errors here in doing so. A key level here is right here. On the TDI, we have a strong oversold zone on the previous day. So it already ripped very strong the previous day to the downside, and it's holding that oversold. Secondly, we have a swapping market sentiment line. So that's two things that should already kind of tell you expect some chop. First off, this, which usually is something I'm never going to trade. I want to see a market sentiment line here maintaining its bias either in the sell zone or in the buy zone, not swapping between buy and sell. So that kind of lets me know there's indecision. So with the oversold and the swapping L50 and no legitimate entry here, those are three things that should have kept me out. I let my emotions take hold and advance over that. And in turn, I did end up taking an entry here. The first entry, it does end up not really doing much. It goes against me where I take half off. I see the trade holding and struggling, and it comes back down the EADMA, and I end up putting the half off back in play, and it ends up working against me. I get out before it hits my stop, so I end up taking a loss here and then an additional full loss here where I could have just been half off. So I had an additional half of an extra loss that I didn't really need to incur. Honestly, all in all, I should have not been in this trade at all. This was just an emotions based thinking I knew the market and I can determine the market and where things are going to go. Ignoring the swapping market sentiment line, ignoring the fact that we're not below yesterday's low and oversold zone. So I really am forcing profits to happen before we break a key low zone at the previous low of the day where we do get an oversold. I am trading through a market sentiment line that's telling me there's indecision between buys and sells, and I forced this here. So moving forward, again, the key takeaways for me on this were if there's no signal, there should be no entry. The best way to stay on edge is by only taking those edge trades based on your system and signals and the ones that are of A or B setup. Avoid the C's and avoid ones that have zero edge like this. So that's the real key takeaway is follow your system and your signals and only the highest probability ones within that. And that's really it. My emotions kicked in here and I felt, due to the higher time frames looking nice, and things like that, I could get that. Not to mention, I am trading the first break of the Asian range. So we have the market sentiment line being indecisive, not clear of previous day low, giving us an oversold signal, and within the Asian range. Four clear things that I overlooked because I felt like trading, that clearly end up giving me the loss I'm very happy to take here. But a key takeaway is to realize these things and not repeat them. On to the next one. I sat out of this. We have a clean trend here. This is on AUD USD on the 1 hour. I do want to note that there's an overbought zone here on yesterday's high. So trading into this is kind of something where I'd like to see us trade above that. We get an A signal below that. I don't really like the EMAs. It's inside the Asian range, so I just felt this was worth sitting out. The next candle does end up tagging you out, or the entry candle does end up tagging you out. So this is a quick loss if you do end up taking it. On to the next one. This is US 30. This is on the 26th. This is on Thursday. Super volatile day here on Thursday with some news coming in. Just pretty choppy markets, but here on the higher time frame, you're really seeing some cleanliness. It's giving an A signal here, due to my trading hours being shortened because I do work a full-time job. I do take this A signal here. This does give me a quick 1R back to high of day. I ended up just getting out while I could. After my trading hours, the next two candles here end up giving a nice A2 candle formation. So your entry would be here, and you take that long with your stop down here. So that is pretty nice for a continuation, but just outside my trading hours. Another similar one there on the same day on the S&P, giving you an A signal. That same candle gives you your take profit. But again, after that, you do get an entry signal afterwards. Let's see here. Last but not least, this last markup, this is today on Friday. This is Euro AUD. Or no, is this? Yes, this is Euro AUD. I took this as a break even. This is or my mistake. This is on the 26th. This is Thursday. I did end up taking this. This is a A2, a B signal. It's a pretty choppy one. Again, another key note here is previous day's low. We're kind of trading through that. I kind of like that it's giving it where it was. So kind of like that it was off that structure. Clean L50, clean AMAs, higher time frames are in correlation. The volume's decreasing how we want. The Asian range is broken. It is off yesterday's low, so it's off structure. So a lot of things really telling me no reason not to enter. I do enter. I end up getting out at break even due to the choppiness, and the EMA is ending up in an upshift. This chops around most of the day, but throughout the day and into overnight, it does end up running well. So maybe something worth holding, but if you're not checking until the following morning, you're probably getting stopped at break even like I did myself. So really depends on your management. I'm fine with being out at break even on this one. Last but not least, this is Friday. Took nothing on Friday. Really the only markup I saw worth entry is a 5-minute A2. This is the 15-minute chart, as you can see. Good L50, good EMAs, good higher time frames. The Asian range is broken. There's worthy risk to the low of day. We're clear of anything else here. So really nothing in your way. The only two knocks I gave it were off structure and volume could be better because we had increasing volume. I gave this a C setup due to it being later in the day on a Friday where things usually slow down. But it does end up running well in your favor. Really sad out of these two, mainly because just later in the day, kind of towards the end of my trading hours, I'll note maybe to have small piece, being that I do give it a C setup, maybe just have a small piece and let it do its thing. But yeah, a quick trading week, some quick losses. Really looking forward to staying on edge and just taking the lessons that are available into the continuation of the rest of the month, which will be over next week, but into the rest of the year as well. Just a quick recap here. This is the Dow Jones off of last week's lows through Wednesday, or here we go. Wednesday, Thursday, Friday. So Friday's lows here. We get a nice retracement after last week's pullbacks. So we get a nice correction here of about 900 points or so after the over 1,000 points or so drop of the previous week. So we're really back to around even. The NASDAQ here is continuing some nice trends. I'm not really sure how, especially being a lot of tech stocks are in the NASDAQ 100. So I'm looking for some sort of correction here. And the S&P, it's actually gotten some decent earnings. So a nice continuation there. Have a nice U here, but we'll keep an eye and we'll keep things open. The main takeaways here are just to learn from any errors or mistakes you make each week and build off of them to move forward. And that is it. We have a rate hike coming in next week and the start of February. So please be cautious, please be safe, and take value from each week as you trade. And everybody have a good one.